this morning.
Ekta, thank you so much for that. I'm looking at the crude oil prices because we are headed for a weekly gain perhaps, but we have seen a sharp decline or a profit taking in the overnight markets there. So the New York session did see a high of $88 a barrel almost, and the WTI was trading at $82 a barrel at one point in time, but $4 shaved off from those kind of highs at this point in time. Navneet Damani is Senior VP Head Commodities at Motilal Oswal, and he joins us to talk further about that. Navneet, hi, good to have you. It's a choppy market, and while, on one side it has been about China reopening, and that seems to have been factored into the markets, it clearly has been about the weak economic data that we have seen come in from China, followed by US, and then the crude inventories build up in US. All of that seems to be putting pressure.
Well, Mecha, it started on a very positive note, and the market has been consolidating between $75 and $82 for the WTI for maybe more than a month now. And yesterday we saw it hitting the highest level of 82 and a half for the last, say, probably 60 trading days. But since then, as you rightly pointed, market has given too much heat to China reopening and zero COVID policy. And to top it up, data has not been very rosy. Now, Chinese markets are headed towards a shutdown once again from 23rd to 27th. They are headed for a Lunar New Year holiday. And post that, historically, we've seen that once market reopens post Lunar New Year, there is a change in strategy or change in shift from China. Then that is what exactly could be anticipated this time as well. Along with that, on the 4th of February, we have sanctions which could be levied on Russia, and a meeting is due there. So a couple of major events which could be a game changer for crude oil prices are headed. So I do not see any directional clarity coming into the prices anytime soon. Maybe this range of 82, 83 on the upside for WTI and 75 on the lower side for WTI could continue, so probably for the next couple of weeks or so.
All right. You've talked about a quarter or so, but what's your sense going forward? Because most of the banks and brokerages believe that the three-digit number is coming quite soon, and that could be by the end of the second quarter itself. Are you bullish when we step into that one?
Well, we have a similar stance, and we pretty much expect that $95 is pretty much on cards, and maybe market tends to overshoot, and $100 also possibility. But before that, we expect some cool off or some correction or whatever we have seen in the last, say, probably 20-25 trading sessions from lows of 72 to highs of 82. So about 5, 7, 10% correction is warranted in most of the commodities which have run up very sharply, be it metals or be it energy prices. Natural gas is behaving a little erratic, so we skip that, but crude and base metals are probably likely candidates for some cool off in the near future.
All right, a cool off of 7 to 10% would be quite a bit, but would those be buying opportunities then, or you think the markets will start consolidating at lower levels?
I think first quarter is largely for consolidation and a range-bound move, and as we approach the second quarter, we'll have better clarity over the recessionary fear which is going around, or probably how sharply China reopens and what are the big bang announcements which are coming up from China, which could provide some impetus to the slowing economy. If that does not happen, then the second quarter is also probably a sluggish quarter, but most likelihood is that China could announce some big bang announcement which could pent up demand for crude oil as well as most of the other commodities in the second quarter, where you can see probably 90-95 as an approachable level.
I'll stick to crude for time being, and OPEC has said that they are looking at 2.2 million barrels per day of a global demand in 2023. IEA said that they're looking at a record average daily demand coming in for 2023 at some point in time. With such bullish cues and sense of demand, what's your sense? When do you see that happen, and is that what will lead to a three-digit number?
Well, it is most likely going to start from the second quarter, and that has to be followed from some good announcement from China, because of the entire crude oil story, 50% weightage comes from China reopening, and 50% could be the other factors which could be driving. So if at all both the two factors do not combine together, the three-digit number looks to be a little far-fetched. But most likelihood is that we will see those numbers coming in as we approach the third and fourth quarter of 2023.
Point taken. I have one final question, and this is on metal, since you mentioned on that 7 to 10% of a decline is what we could see for many of these non-ferrous metals as well. Any metal in particular where you see more bearishness than the other? Because we are looking at strong fundamentals across board. Inventories are on multi-year highs. Do you think that could be a supportive factor?
Well, inventories are not suddenly in the declining mode. They have been declining for the last 6 months. But what has happened is China's zero COVID policy and some speculative interest has given about 12 to 15% rally in most of the metals in the last probably 30 trading sessions. And that's pretty much a surprise, because this kind of demand is not there in the store at the moment. As I mentioned, that second quarter is going to be the game changer, and just like 2022, 2023 also started on a very positive note, but will it hold or not is the question. My bet is that we will see some cool off, some consolidation before any reasonable upside from here on. Largely, whatever price possible upside was due in, say, something like zinc or copper is factored in, and some cool off is warranted.
Okay, Navneet, Manisha, thank you so much for joining us and taking us through that discussion. That's all about the commodity markets. For our own market